Okay, so this video is for anybody who wants to start to learn how to trade, but they don't know where to begin. There are tons of videos out there, and I know this video is just yet another video, but this might give you a very clear sense of direction on how you want to start your journey. I've been taking calls for this very purpose, so I'm going to share what I think is the best path to learn trading. There are two schools of thought when it comes to trading. You have the fundamental and you have the technical. The fundamental school of thought is more concerned with how the company performs. You want to be concerned with the earnings per share, the sales, the debt levels, how the management performs, what's the competition up to, and so many other factors. These are all fundamental factors. On the other hand, you have the technical school of thought, which is not concerned with the fundamental factors at all. Instead, it concerns itself with the stock price of a company. At the end of the day, think about it. Do you want a strong fundamental company, or do you want a company with a strong stock price? We're all buying stocks so that the price appreciates by the end of it. Therefore, technical analysts just confine themselves to the study of the price because they believe that the price reflects all known and future fundamentals in any case. Nevertheless, people like William O'Neill and Mark Minervini, traders who I will be discussing also deeper into the video, and I'll also be recommending their literature to you, recommend that you go for the best of both schools of thought. You want a company that is fundamentally strong, and you want a company that has a good technical price strength as well. So it's the best of both worlds, and I don't see any reason why you should choose one over the other. Instead, just go with both. After this little introduction to both schools of thought, you want to get very comfortable with understanding the stages of a stock. Human life also moves in stages. If you take 20 years at a time to be one stage, 0 to 20, 20 to 40, 40 to 60, and 60 to 80, and then we perish. But stocks naturally do not perish because they are going concerns. However, stocks keep going through these stages or life cycles. So they die and then they are reborn and so on and so forth. So during COVID, actually, when stock prices were crashing, we call that stage 4, stage of falling stock prices, where there is absolute misery in the market and everyone's selling their stocks. After that, when things have actually bottomed out, you have something called a stage 1. And this is a stage where smart, savvy investors start accumulating a stock. And this is where we see that a stock is reborn. Once buying demand overwhelms supply in the market, the stock tends to rise and then the stock enters stage 2. This is where you want to enter the stock. You don't want to enter within stage 1 because the stock could be in stage 1 for several years and your money is going to be tied up and your money has opportunity cost. Once we're in stage 2, either we buy on a breakout when the stock is breaking out of stage 1 and entering stage 2, or if you've missed the breakout, you want to enter when the stock breaks out from one of the bases that it forms within stage 2. You can't hike up the Mount Everest in one day. You have base camp and then several camps there. Similarly, a stock cannot give its multi-bagger returns in one single shot. It forms something called bases, which is where it's kind of resting and giving you opportunity to enter. So you want to think of these bases or periods of rest as a tug of war going on between buyers and sellers, where eventually sellers get exhausted, buyers win, and then the stock resumes its upward journey. Now that you have a little introduction about how the stock market works, you want to focus on the fundamental aspects of the stock. So you want to see if current quarterly earnings are actually rising consistently, if sales are consistently rising, how the annual earnings performing. And this is a CanSlim concept of William O'Neill, where the C and A of CanSlim is about current quarterly earnings and annual earnings. Of course, you want to focus on price strength of the stock, which means that you want to focus on stocks with relative strength. How is your stock performing relative to the general market? The market loves to move in sectors and themes, and the strong sectors receive the maximum inflow of money and therefore tend to give multi-bagger returns. After you're done with picking leadership stocks, you want to see if your stock displays buying demand or not. This happens to be the most important thing, because if your stock is not displaying buying demand, which means that if it's not being accumulated by smart, savvy investors like mutual funds, institutional investors, and insurance companies, it's not likely to rise consistently for a long time. So you want to see more funds piling in. You want to see a shareholding pattern of a stock and see if there is signs of accumulation over several quarters. And finally, you want to see how strong the sector is of a particular stock, because money in the market tends to move in sectors. If you've noticed recently, brokerage stocks have done very well in India. Railway stocks naturally have done so well. Renewable energy stocks, no matter how the company might be doing fundamentally, it could be poor, it could be fabulous, all stocks have tended to do well. Therefore, when the ocean tide rises, the trash rises with it as well. You're more likely to make money in a bad company from a good sector than a good company from a bad sector. So you always want to be focusing on the sector. And if you notice that one company is receiving inflows, the sector's looking healthy, has good fundamentals, you want to study all companies of that particular sector. After that, we come to the price and volume chart. You want to get very comfortable with studying the chart of a stock price and seeing how accumulation looks on the chart. Mark Minervini, Nicholas Darvas, William O'Neill, Dr. Chris Catcher, all these people, they have different names for their strategies, but they're very good at identifying which stock is being bought and which is being sold. Once you get good at identifying this, you can actually make a holistic picture of a stock and then start your trading journey, specifically swing trading. Now, Mark Minervini has a pattern called volatility contraction pattern. William O'Neill has a pattern called cup and handle, and Davos has a pattern called the Davos box. Different names, but the premise is similar. These guys are very good at identifying where demand is overwhelming the supply interest in a stock, and they like to buy stocks at a point from where the stock is absolutely likely to fly, and they call this point the pivot point. When you study their literature, you'll realize that they like to buy stocks when supply has absolutely been exhausted, and these signs are available for your notice on the chart. So you want to focus on their literature. William O'Neill naturally has his book called How to Make Money in Stocks, which is essential reading. Mark Minervini has his books called Think and Trade Like a Champion, Trade Like a Stock Market Wizard, and Mindset Secrets for Winning. All three books are incredible. Mindset Secrets for Winning is not just about traders, it's for anybody who wants to outperform in markets and in life, pretty much, because he's compared trading to a sport, which I think is a fair analogy. This book also tells you don't ever want to make ruinous choices in life and in the markets, because if you make ruinous choices in the markets, you tend to lose your money and your emotional confidence, which is very hard to gain back. Money you'll still earn. And in life also, you don't want to make ruinous choices, basically choices that make you end up in prison or in the hospital. Finally, whenever you are trading, once you've read this literature and you start trading, you want to always enter risk first. Before you even buy, you want to write down what is your risk factor, how much are you likely to lose on the stock should it move against you, because even if you're the finest trader on earth, sometimes things will move against you and you need to be very good with guarding your positions. Govardhan Gajala, the 2023 US investing champion, is a big fan of tiny stops. Mark Minervini and William O'Neill recommend stops in the 8 to 12% arena. Vibha Jha, again, a legendary trader. She's entered the competition, but she's a very successful trader. She's also a big fan of having concrete stop losses. So stop losses are definitely something that ensure longevity in the game. You want to be focusing on your stops. And once you're trading, you want to actually ensure that you're journaling your trades. So if you buy a stock, before you buy it, you want to write down why you're buying it. And once you've sold it off, you want to write down why you sold it. If you sold it at a profit of 20%, great. But could you have waited? Did you get greedy? Did you get fearful? And if you have a loss, naturally, you want to write down what went wrong, how can you improve, etc., etc. Once you do this exercise religiously, at the end of several months, you're going to have so much data at your disposal, and that's going to mean you can make wiser decisions in the future. The point I want to drive home is there is no alternative to education in the markets, and you have to have a desire to succeed. Not only that, you have to begin with a strong mindset. You have to genuinely believe, I can make money in the markets. If others have made it, I can also make it. Let me find out the path that others have followed. Let me follow them and eventually carve my own path. If you believe that the stock market is something that is not for you, you're never going to get successful. You want to have a desire to succeed, and of course you want to commit to the process. Read as many charts as possible, get a mentor, watch a lot of videos. And videos remind me that a YouTube channel called Trader Lion is actually superb. Richard Moglin again is doing a fabulous job, and you want to check out every podcast on that. There's so much to learn. Honestly, the amount of information out there these days that is absolutely free of cost is mind-boggling. I don't think our ancestors could have dreamt of having access to such knowledge. We have access. The only thing is we are lazy and we're not committed to watching a 2-hour video from the start to the finish. So if you're on a drive tomorrow or whenever, just make sure you get through one video, take notes. Of course, you want to study these videos as you would study a book. So in a nutshell, this is how you can begin your process of starting to trade. And of course, once you've started, it's an entirely different process. Of course, this is not a very specific video. If you want a very specific video on what candlesticks are, how moving averages work, what patterns should we follow, of course, let me know in the comments. If you have any other thoughts, let me know, and I shall see you for the next one. Happy trading until then, and make sure you subscribe.